Hello everyone and welcome back to the channel. My name is Brent and in today's video we're going to be taking a look at the M1 Finance portfolio. In this video I want to go ahead and go over every single holding within the portfolio. We are going to be looking at a few individual company earnings that have missed recently and have beat but have kind of came down a bit overall with their price. So we are going to be setting up our buys here from Monday. We're also be taking a look at the overall performance of the portfolio, 1 week performance, the dividends that were paid out last week, and kind of applying all of that into our Monday buys. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course, give this video a thumbs up, make it blue, really helps out the channel. Others see this video as well. Okay, let's go ahead and jump over into the M1 Finance portfolio. Now we've had this back since January 8th, 2018. We're up roughly 77.25%. The majority of this comes from market gains of 8,800, and we've earned dividends of over 2,400, meaning that we've sat through our company's ex-dividend date, and we either were paid or we're going to be paid in the future because we've sat through the ex-dividend date. So we've made or earned over $2,400 of dividends. So this portfolio is starting to get pretty beefy now around that third year, which is pretty interesting to see here in the short term. Now we do have $227.66 sitting in cash. Some of this is from dividends. If we take a look at the week here, majority of our dividends came in on Thursday and Friday. So we had Apple, $2.44, Clorox, $12.60, Main Street Capital, $8.15, and we had Realty Income at $3.05. So the total for the entire week there is a whopping $26.24, all generated there on Thursday and Friday. So that's pretty nice. And then we made our deposit there on Friday of $201.42, which all of that together, the dividends and our deposit, our weekly deposit, is going to be all wrapped up and invested here into the market here on Monday. Now, as far as the 1 week performance, we can take a look here. We are up a nice 1.8%. We made a little bit over $660, the majority of this being from market gains of $645. And we did sit through a few ex-dividends last week, which means that we are going to be paid out in the future roughly $15.86. Now, if we compare our return in comparison to the main indexes, we can see the S&P 500 put on a 0.71% change there. I think last week my portfolio was flat, so it had gone up initially, pretty much nothing, while the markets had moved up slightly. So all I did this week was just slightly overperform them because my portfolio underperformed them last week. So everything is kind of averaging itself out over time. Dow Jones up 0.87 and the NASDAQ is down 0.09%. So last week we actually were flat. I think we were up like 0.04, where the rest of the market was up 0.5%. Whereas this week we are up nicely 1.8%, whereas the rest of the market is up roughly 0.71. So we put on about 1% more versus the market. But I think the market had beat us from 0.5% to 1% last week versus our portfolio staying pretty much flat. Now, our dividends did increase this week. Last week, we purchased 2 companies. We made 2 buys. We bought Merck and Hormel Foods, and we added these into our tracking dividend. This is trackyourdividends.com, completely free. I went into here and updated my Hormel position here, so I have 23 shares there and 4, but we can all do this pretty easy. If you head over into the M1 Finance, click on your holdings and type in the ticker symbol that you recently purchased. You can kind of get the latest and greatest information there. So 2303 rounded up to 2304. So I just kind of come back over here, hit the little pencil that lets you adjust. You go ahead and punch in your shares of 2304. Our cost basis did come down. It was at 47.23 or 24, so it came down 1%, from our $100 that we bought a little bit more of. So we're just kind of averaging in while this position is kind of negative. This lowers our cost basis, increases our yield on costs, and increases our overall shares and dividends that we're able to acquire while the position is down a little bit. We're also going to be taking a look at Hormel Foods. This is one of the earnings that recently, went through, and we'll take a look at the earnings here as well. So that is how we recently went through the portfolio and updated all of the holdings within here. And now this portfolio, these are always slightly off right here. We can see here that the value is at 37,483, whereas this portfolio here is showing 476. So it's off by what? $6 or so, $6 to $8 or so. And that's because of the fractional shares aren't able to go in here all the way out. So that's completely fine. But the main thing here is that it's tracking our annual income. So here we can quickly go in, take a look at our annual income increase. I believe it increased roughly $7 since we bought those positions last week. We just kind of slightly increased our shares, which slightly increased our overall income there. So $1,034 is what this portfolio currently generates in dividends at the moment. Now, I want to go ahead and go over every single holding. I just went through here pre-recording and took a look at positions that I want to talk about here. So we're going to go through each position, where they're currently valued. What we're taking a look at here is the price in the purple, their 200-day moving average in the blue, their short-term moving average, which is the 50-day in the green, and their current yield that they are offering. And it kind of gives you a history over the past 1 year. So right now, Apple is trading above its 200-day, 50-day moving average and gives you a very low starting yield of 0.75%. So right off the bat, Apple is pretty high and flying at the moment. So, if you're investing for the long term and you're just starting up a position in Apple, this could be a good time. Anytime's a really good time to buy when you're starting a position in something. But in this case, if you already have a pretty sizable amount and you're just kind of adding into this point right here where it's trading above its 200, it's trading above its 50, it's trading with a really low starting yield, it's going to take a while. And there could be some resistance at this point since it is trading near all-time highs. But if you're investing for the long term and you're just kind of planning to dollar cost average into this position to build it up to a sizable amount, then you can buy a small bit and then average into it as there's opportunities wherein it's red or so. So Apple, just kind of going through here pretty quickly on these. I was just kind of using Apple as an example as it is our first one there. ABBV is our second position here. We can see ABBV is also trading above its 50-day and 200-day moving average. There was a time way back in 2020, when ABBV was offering a over 5%, nearly 6% starting yield. I think at one point here, we can see back in March of 2020, it had offered roughly a 6.5% starting yield versus today, it is now offering a 4.34% starting yield. ABBV right now has been pretty much on fire for quite a while. And, it is trading at 116.48. So pretty hot and up there at the moment. Let's see here. ABM Industries. This one, we can see that in the short term, that 50-day may be crossing under the 200-day moving average, which is kind of showing weakness, death cross. So if this does continue to kind of trend either sideways or break down here, this could cause the short-term momentum to go under the long term. And this position could fall a bit more in the short term. We just have to see how this one plays out at the moment. So really not one I'd want to average into at this moment. It came down off $53, $54, had some resistance here at that $53, $54 mark, lost a little bit of momentum. Maybe some earnings came out, wasn't where it was supposed to be at, and it tried to pick it back up. But we'll kind of see how this kind of hangs. Will it come back up into the 50s? Or will it kind of lose out, hit some resistance here within this area and kind of fizzle back out? We'll kind of see how that plays out. Avery Dennison, ticker symbol ABY. This one's trading above its 50-day, 200-day moving average. You can see here it's been consistently moving up in a nice little trend here to the upside. Here it had that golden cross. The 50-day crossed over the 200-day and just slowly started chugging up higher and higher. This one stays pretty consistent. You don't really see it spike too often. We all saw that March 2020 where everything had spiked with high yields. Price dropped really quickly. So again, this one is kind of out of the norm, where at one point you would have got a starting yield of over 2.5%, whereas today is at 1.16. So pretty crazy right there. Okay, jumping over to Cardinal Health. Cardinal Health here, we can see that it was trading near $60. Took a bit of a dip here, down to $51.70. Now, what exactly made this happen? If we take a look over at their earnings, Cardinal Health had actually came in at 77 cents versus estimated at $1.18. That is a difference there of negative 34.7%. So they way underperformed there with their earnings. And if we take a look at, as far as what they had in their earnings statement here, they were really disappointed with their results, and they're looking forward to taking action to drive better performance. There was a little snippet in here where they identified 250 million of additional cost saving opportunities. So hopefully they can kind of get a plan together and kind of turn it around here. But as far as the company, they do not provide any forward-looking guidance at the moment. Everything is kind of undetermined. So we'll kind of take a look at where Cardinal Health ends here in the long term. In the short term, they're a bit rocky. Revenue-wise, they did pretty well. They came in at $42.5 billion versus expected at $40.39 billion. So that just kind of caused them, with the earnings per share dropping and issues there, kind of caused their price to drop there in the short term. Clorox here, jumping over to Clorox, ticker symbol CLX. This one has been downtrending for quite a while, so there's really no end in sight at the moment. I did look up Clorox's earnings as well. They missed on earnings. They missed on revenue. 26% miss on their earnings. They came in at 0.95 versus estimate of $1.29. Revenue came in at 1.8 billion versus revenue of 1.92 billion expected. So they way underperformed both in earnings and in revenue, causing their share price just continuously to, downtrend. As far as, expectancy, they actually expect to continue to lose. I think when I was looking at their outlook here, they already show a 2.2 to 6% decrease in sales. And if they're looking at 2022, they're projected to be down another 2 to 6%. So Clorox at the moment is looking a bit rough. I'm invested in Clorox. I am down a little bit at the moment, but this could just continue to downtrend for a bit up until something turns around with the company. But this is one I'll probably have to go through here and take a look at what's going on as far as, they give a pretty good breakdown of where they are missing with their numbers. So I'll have to go through here and take a look at the report here as far as their earnings details. CSCO here, whoops, let's go ahead and trigger that one once again. CSCO price is trading above its 200-day, 50-day moving average. It is offering a 2.59% starting yield. This one in September of 2020 had offered nearly a 4% starting yield. I think we had talked about this one way back when. In that time frame, I actually bought some CSCO. I remember eyeing CSCO at that low $40 price tag. It was in the 30s. And I thought it was just, it was too much of an opportunity to really not buy. So I did end up buying some CSCO way back when, I remember. But this one has been nicely moving up. Just going to go ahead and continue to let that one roll as it is. Ticker symbol DLR, Digital Realty Trust. This one, I remember eyeing this one as well, just never bought into it. Here we can see that its short-term 50-day moving average had crossed over its 200-day, causing, golden cross here. And share price has really nicely, exploded to the upside. It is trading both above its 50-day, 200-day moving average, and offers a pretty low starting yield now of 2.87. This is one I'm just going to go ahead and let it ride. And Essex Property Trust, this is another REIT, same with Digital Realty Trust. This one has kind of came down here in the short term, but I'm not going to say that this is, any sort of crazy move. We can see that it has slightly came off that $320 price. It came down to 316, so it is slightly under its 50-day, so it's underperforming in the short term, but this can all quickly turn around just really, really quick. So nothing to kind of gawk at there. It is offering a 2.64% starting yield. This isn't one that I kind of focused looking into their earnings at the moment. I think it's still really performing really, really well here in the short term. Hormel Foods is one that I recently added to my portfolio. This is one that I think could continue to be a buy here in the short term. Now, when I take a look at their earnings, Hormel Foods had actually came through on the button. So as far as their earnings per share, they had expected 42 cents. Consensus earnings estimate was 42 cents. They came in at 42 cents. So they met expectations. They had a revenue of 2.6 billion. They had expected 2.4 billion. So that was a beat and a beat. This is showing the earnings whisper expectancy of 0.44 versus them at 0.42. So this was their way of saying that they came in under what earnings whisper had expected of negative 4.5, but this is actually incorrect. They hit spot on. They beat or met expectations, I should say. So even though it's been downtrending here with the share price, I think that this one, because they met expectations, they know what they are capable of. And as we read through some of the little writing down here as far as their outlook for the current time frame, when I had taken a look at their outlook, they actually looked forward. So we are increasing our full year sales guidance range and reaffirming our earnings per share guidance of $1.70 to $1.82. So they're actually increasing their full year guidance. They're reaffirming. So they're basically coming out and saying, look, we have a very positive outlook with the food service industry. They see a continued elevated demand in retail, deli, international channels. So they're basically increasing their guidance. They're saying that they're going to shoot up a little bit higher. So this one overall, I do not believe that the current share price of $46 is kind of warranted on this one. So I feel pretty confident continuously adding more Hormel food to my portfolio. So this is one that I will be added into my portfolio, or just kind of buying more of this one because it is already in my portfolio. So Hormel Foods, its earning came in meeting expectations. They have pretty good forward guidance as far as what they expect for the remainder of 2021 and beyond within their sector and their current pricing. The next one here, IIPR. This is trading near all or at all-time highs. Above its 200-day, 50-day moving average, offers a 2.2% starting yield versus back in September 2020, a nearly 3.5% starting yield. So this one's been blowing up here in the short term. Johnson & Johnson trading above its 200-day, 50-day moving average. It looks like it's trading at all-time highs here. I remember when this one was sort of like the median, everyone would start off and everyone would say, just invest in Johnson & Johnson. They average around a 3% starting yield. Well, not anymore. They used to have a pretty good starting yield of nearly 3% for quite a while. I think that was somewhat 5 years ago. Yeah, you can see here, they stayed pretty consistent in that 2.8% range for quite a while. But here in the short term, with just as much growth as they have had, their yield has came down to 2.32. JP Morgan, been doing really, really good as well. It is trading really nicely here. It has been trending sideways since looks like February. So with rates kind of staying where they're at, they're not going to be increasing rates. They have other ways of generating money, but this one's been staying pretty consistent here. Well, you can see they had a breakout here, short-term 50-day crossover, the long-term 200-day. Their share price exploded up to the upside. Now they've been kind of trending sideways, consolidating. We can see that their short-term is coming down slightly. So we may see a breakdown here in JP Morgan in the future, but we'll just have to continue to watch this one. Kimberly-Clark here. It has broken down over the long term, but we can see that it has been kind of building, trending sideways. We can see short-term 50-day, maybe crossing over that 200-day moving average, putting some pressure to the upside. So we may see Kimberly-Clark building up here, and we may see it pop higher back into the 140s. If it continues blasting past that, could even hit the 150s. Lockheed Martin is the next one I want to kind of take a look at here. Lockheed Martin recently came off not its highs, but it was trending pretty in the higher atmosphere for this company at 185, 186. It is now trended below its 200-day, trended below its 50-day. It's really trying to find some support. It may not find any support. You can see here there's a little smudge right there. It looks like it may try and hold on to that 157 right here if we were to draw a line right there, but this wasn't really like long-term support level, so we may not see any sort of bottom for Lockheed Martin until the 130s. That's a $20 difference still off. Okay, so let's go look at their earnings now. So Lockheed Martin recently beat on their expectations. They came in beating earnings. They came in at $7.13 versus estimate of $6.51. That was a beat of 7.2%, reported revenue of 17.03 billion versus expected of 16.93. So that was a beat there of 0.6% with revenue growth year over year of 5%. So beating out last year's growth and continuously moving forward. I don't see anything wrong with Lockheed Martin here in the short term. This one just kind of came down for whatever reason. I'd probably have to look at it a little bit further, but it's already in the portfolio. I think this one could be worth the buy. We're going to go ahead and probably make our decision with Hormel Foods and Lockheed Martin, but we're going to go ahead and take a look at just a few other ones here. Lowe's here has came down recently off their all-time highs. This one, I believe, is kind of with the lumber. You know, lumber had been shooting up until May. It has kind of came down a bit, so sales for other home improvement and lumber and all those little items as well kind of probably brought Lowe's down along with it. So it's not trading above its 50-day moving average here in the short term. Had a little bit of a pullback, but it is still trading above its long-term 200-day moving average of 179. It is offering a 1.36% starting yield versus not too long ago offering a nearly a 1% starting yield there. So it has pulled back slightly and offering a nicer starting yield versus what it had in the past. Main Street Capital trading near all-time highs, beating out its 200-day, 50-day moving average. This one, pretty crazy that even though it's trading at these, what appears to be all-time highs, it's still offering a very nice starting yield of 5.75%. Method here, this is one that I recently added to my portfolio here in 2021. This one just continues to chug higher. This one's at $48.88, above its 50-day and 200-day moving average. Its yield has dropped down now below 1% there, so not going to be touching that one. 3M trading above its 200-day, 50-day moving average and offering a starting yield of 2.94. So recently it did break down below its 3% starting yield. I remember when this one was around 3.4, 3.5. I remember Ian over at PPC Ian had been talking about 3M for quite a while with the masks and all that initially when 2020 took place. So this one has been nicely trending to the upside, just continuously moving. And it looks like it's kind of getting into the sort of down sideways trending. We can see a double dip right there where it had some nice support and pop back up. So it's building some momentum. We may see it move higher in the long term, but we'll just have to wait for earnings and such to kind of help push it a little bit along. Merck here, this one's been breaking down. I don't think I pulled Merck here. No, I didn't pull Merck data. This one just kind of trending. I don't see anything wrong at the moment. We can see 50-day has been underneath. If the price for whatever reason does, I think they missed recently on their earnings as well. I think I looked at this one really quickly, but nothing I want to kind of talk about here in this video. This one just kind of trending in that little range right there. Realty income trading at all-time highs above 50-day, 200-day moving average. It did offer a nice starting yields in the 4% range versus now in the 3.91 range. So not bad. Pfizer is the last one. Oh no, we have another one here. So Pfizer recently broke out to some all-time highs, really spiking from $40 to now $48.48. So this is a crazy spike here in Pfizer, which makes me kind of eye it. Do I want to sell a bit of it in my portfolio, just take profits and wait for it to kind of come back down? You don't see Pfizer really popping up like this very often. $42 seems to be a pretty normal high for this one. The reason for this is recently Pfizer came through beating their earnings. They reported $1.07 versus estimates of 0.97. That's a beat of 5.9%. So they didn't really blow it out of the water here. And their revenue at 18.98 versus expected at 18.35. So this is a 3.4% difference there. So revenue, I think, is the main factor here for that price. Revenue wise, they're up 60.8% year over year. But can this stay consistent? Pfizer here has one of the vaccines currently that individuals are taking for the whole thing that's going on. But this isn't really sustainable for the long term. So what I'm looking at is maybe take a little bit of profit on Pfizer here in the short term, wait for them to kind of come back down, because I don't believe that this is sustainable here at this price. I think if I take a little bit of profits here, wait for it to come back into the $42 range, I can always average a little bit more into it back then. So this is one that kind of caught my eye. Maybe just, this is similar to Caterpillar. I think Caterpillar got removed from my portfolio. It was trading, it broke out to some all-time highs for a while, and I just want to take some profits. It was trading way too high at, I forgot where it was at. It must have been recently at 240, 250. And yeah, I think it was recent here in this $230, $240 range. So I did sell out of Caterpillar at that $230, $240 range. I thought it was a little bit too high. Their revenue, net income, free cash flow, one of the financial metrics I had looked at had been kind of coming down. So I was showing some weakness here, and this one kind of broke down into the low 200s. So this could be a better opportunity to buy into Caterpillar. But we see the 50-day short-term one is, it still has a little bit of short-term weakness. So if it continues to kind of trend in this range and actually breaks down, we could see Caterpillar falling down below into the $100 and some mark. So this is just one similar to Pfizer. I'm not saying that Pfizer is showing any signs of weakness, but that $48 price is just kind of out of the norms for Pfizer. Siggy here trading near all-time highs at 83.70 above its 200-day, 50-day moving average. Offers a pretty low starting yield of 1.19. Simon Property Group, this is one that is trading at current, for the 1 year, 52-week highs, but we can see it hasn't really recovered its total price. So it's doing really well in the short term. We can see that the 50-day did cross over the 200-day, kind of driving that price higher. But with the closure, if there is a closure once again, as we've seen, I know here in Oregon, where I'm located, on Friday, we just initiated the mask requirements all over the inside of our buildings. So that's only part one. So we don't really know what's going to go on into part two. I know a lot of companies decided to just kind of close their doors. They're not going to be doing business at this time. So we may see another closure, and this one could be one I want to sell out of completely while it's here. We can kind of see that the green level is kind of slowing down. It's not going to the upside as fast anymore. We can see that it just kind of plateauing. That's a good word right there. Plateauing off to the side. This could be an opportunity just to kind of sell out of Simon Property Group, because this one is not risky retail real estate investment trust, and just move these funds elsewhere. So this is kind of something that I'm taking a look at as well. Stanley Black & Decker. Stanley Black & Decker here. This one kind of rocky here in the short term, but we can see a W here kind of forming. So this one we'll kind of take a look at. In the short term, it looks like it's kind of downtrending a bit. So overall, just kind of one of those ones you just kind of buy, hold on to. We'll see if it has any weakness here, but so far we just kind of let it ride at the moment. CSCO, ticker symbol SYY. This one recently broke up. We can see a little bit of a double bottom right here. Broke the $79, which is above that $50 200-day moving average. If we see this kind of stay out in this area here, we can see that it had some hard times breaking out at that 85. We have the long term at 76.46. We have the short term 50-day at 75.69. If this can stay up here, this could be a breakout here, golden cross, where this one just continues to break out into some new all-time highs, at least above that $80. It could trend even higher. We can see that this one really hasn't gone anywhere since mid 2018. It stayed at $75 and just kind of trended within this range for quite a while. This one would be one I'd want to take a look at the earnings to see, does earnings show that this one will move higher in the long term? Then this could be one to just kind of buy into if it does have that golden cross form here. UGI 1 year outlook, it is trading near all-time highs above that 50-day, 200-day moving average. Walmart recently broke out. I was taking a look at Walmart. They beat expectations quite a bit. 169 for the reported estimate of 122. That's a 36.3% beat. Revenue beat by 5% at 138 versus 131. So very nice. That's a little breakout right there for Walmart. Pretty interesting. as well. We can see golden cross forming there. 50-day will cross over the 200-day here, which may cause Walmart to really up. You know, it hasn't really gone anywhere since mid-2020, but we could see Walmart break out to say 150s, even hitting 160s here in the short term. But I'm also eyeing Walmart. That's why I was taking a look at their reported earnings. This one is showing pretty nice. I'd have to take a look at their outlook as well. Not a whole lot of data displayed here, but I'll have to take a look at Walmart a little bit deeper to see if that is a position that I want to average into a bit more as well. And WP Carry, this one's trading near not all-time highs, but 52-week highs. We take a look at the 1 year here. It is trading near 52-week highs, but over the past 5 years, you can see a big dip here back in 2020, all the way down into the $40 mark. So it did get hit pretty hard during 2020. Even prior to that, we can see some weakness kind of forming here. In the short term here, this one has done really well. Caterpillar, we already kind of discussed this one. It's in my eye bucket. You know, I'm looking at it. I may buy back into this one, but here in the short term, we can still see that 50-day kind of coming down, showing some weakness here in the short term. So overall, by taking a look at every holding within our portfolio altogether, I am pretty confident so far in Hormel Foods and Lockheed Martin. So those are the two companies that we're going to be buying up on Monday. So all I'm going to do here is go into the portfolio, head over to Hormel Foods. We're going to be buying half of this. So that's $113.83 going into Hormel Foods, and $113.83 will be going into Lockheed Martin. Now, Lockheed Martin is actually positive in the portfolio right now. We can see that Lockheed Martin is up 27.26%, but they did come down a little bit off their highs. And I believe that this is the buying opportunity just because their earnings was completely fine. They're still guiding forward into the future, having a nice positive outlook. So short-term volatility in that position itself, Lockheed Martin is in a position that, you know, I would love to build all these positions up to 2,000s. Portfolio is getting, you know, it's going to be breaking over 40,000 here soon. There was a point in 2020, you know, during the deepest part of this portfolio, it actually fell down into the $14,000 range, being at 21,000 prior to that. You know, in February 2020, it was at 21,000. It fell down all the way into that $14,000 mark. And here we are, not even a year later, or a little bit over a year later, and we've doubled and put on some. So we're going to go ahead and continue chugging higher into the future, and averaging up is completely fine if we see opportunities with the share prices. So that's one of the things that I see in Lockheed Martin. So let me know down in the comment section below, do you hold any of these companies within your portfolio? Let me know which ones you're currently holding. Do you believe with the buys of Hormel Food and Lockheed Martin, or do you think there were some better opportunities out there as we were going through the companies? Let me know down in the comment section below. Again, if you guys stuck it out through the entire video, I want to go ahead and thank you. You know, that is very appreciative and really appreciate that. If you guys have any comments or questions from me, let me know down in the comment section below. Otherwise, if you are brand new, remember to give this video a thumbs up, make it blue, subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and thank you all for watching. I will see you guys next time. Have a great day. Bye.